for a long time. Don't really care about this, but I do want to go over a chart that I just saw. In my opinion, this is a really good chart. Now, specifically what I want to look at, this is Ondo, by the way. Specifically what I want to look at is how you could have caught this entire trade in, like, let me see, this took about, let's say we started here. So this took about 8 days. So I'm going to show you how you could have captured every single one of these trades in 8 days, right? So the reason why I tell people to trade one coin is because it's much easier to track one coin than it is to chart 20 and try to trade all 20 of them, right? If you trade one coin, you know, in 1 week or 1 month, you can capture all these moves. So what do I mean? You can capture this move, you can capture this move, you can capture this move. That's 3 trades, okay? These 3 trades will generate you much more than what, you know, as opposed to you trying to chase 20 coins and not capturing any of them because you're too busy looking at this one, that one, setting alerts and missing alerts, etc. Right? Right here, if you caught, I'm not saying you're going to catch the absolute bottom. We're going to even be realistic and say you didn't catch the bottom. So from here to, let's say not even all the way this high, but this high, it's about a 9% move. On leverage, that's already, depending on leverage, that's like 90 to 200+% move, right? Now let's say you shorted somewhere in this area, that's about a 7% move, right? That's 9 plus 7, 16. And then let's say you capture this move right here, it's about a 3 to 4% move, right? So that's what, that's roughly 20% in 1 week, in one trading week. 20% a week, repeat that 4 times in a month, that's 80%, okay? That's more than enough to become profitable and to make the money that people are looking for, especially if you have the capital, which means you don't need to trade every day. You don't need to trade 20 different coins or, you know, 20 different stocks. Find one or three, find one, somewhere between 1 to 3, right? So I'm going to go through this entire chart starting from over here, okay? And I'm going to pinpoint how we could have captured all 3 of these setups, right? So obviously the first one is down here. So in real time, you're not going to know whether price goes up here, down here, etc. Right? You really don't know. So I'm going to show you how to mark up the chart to prepare for the trades. Because trading is really planning for the trade as opposed to just trading as soon as you open your trading view, right? A lot of people tend to just open up trading view. They're like, oh, price is here. It looks like it's going to go up there, and they trade. That's the wrong way of trading. That's the way to lose money because you're not really prepared. You don't know where price can really go, right? So I already forgot where price went, but let's just assume based off the current price, I have no idea where price can go. Okay, so what does this mean? This means I want to start to identify my liquidity. So whether you start from the daily, the 12-hour, the 4-hour, that's going to be up to you depending on your trading style, right? So I'm going to go between 4-hour, 12-hour, and daily just for this one, just to show you how to mark up the charts. All right, so for example, right here, this is going to be my external liquidity. Oops. Okay, this is going to be my external liquidity. And right above it, I can already see that we have distribution. Now, if you don't know what distribution is, it's basically smart money selling their positions, right? So in this range, so distribution is a trading range, same as accumulation, right? Accumulation is on the bottom, however, like for example, like down here, this could be accumulation. And it's literally just a trading range depending on where you are on the chart. So in this case, this distribution occurred at a bearish fair value gap, okay, right here. So this is just distribution. Now, if you had the opposite, where this was a bullish, so just for educational purposes, let's say this was a bullish fair value gap, this would then become accumulation, and this would be accumulating at a fair value gap, okay? Now, ideally, when you tap a fair value gap, you don't necessarily want price to stall there, but this just happens to be where price was stalling and distributing, right? So right here, this is distribution. So this high right here is going to be our liquidity. Okay, so this is just me labeling the chart. Okay, so on top of that, I'm also going to want to label a key level above this liquidity level, which is going to be over here, right? Hopefully that makes sense. Now, how did I get this box? Well, from my experience, I know how to draw boxes, but like, let's say you don't, right? You can go on a 12-hour time frame, you can go on multiple time frames, and what you want to identify is a key level where you have multiple touches, meaning you have support, resistance. So like for example right here, I can see right here, if I go even slightly a little higher, I have multiple touches. I have resistance, support, resistance. You know, price broke out here, support, resistance. This one has multiple touches, right? So this is ideally going to be my resistance. Now, a lot of people are going to make the argument, is this not resistance, right? Because this is where price went up and shot down. Yes, this is resistance as well. But our main focus, so I'm going to delete all of this. Going back on the 4-hour time frame, is my main focus is this area right here, because if you look right here, now this could get a little confusing, but basically this is where price broke structure and had a retest and then continue lower. So this is going to be my supply zone. Okay, I'm going to label this 4-hour, honestly I guess 4 hour, we'll label it our 4-hour supply zone. Okay, now right above it there's this wick, this massive wick. Now usually, just because I feel like people are going to get confused, when you have a body like this and then a long wick, inside of this long wick is an imbalance in price, which does mean that price could go above the supply zone. But I want to focus on this area first. Okay, so there is an imbalance here, but my main focus is this high, this supply zone, and yes, there's an imbalance somewhere in here, so you might be able to get a better level. But after I've done that, okay, so I've already marked up where price could go. Price could either go up here or it can go down here. I want to identify a green box right below my external liquidity, right? Because if price is going to sweep down here, it's going to sweep into a green box, right? It has to sweep somewhere. It doesn't just sweep down here and just go up. So we have to give this level, wherever it is, maybe it's here, down here, up here, it doesn't matter. you have to give this area some significance. So if we go here to the pass, going over here, we can see that we have a demand zone over here, right? Which also happens to line up with where our low is. So if you even buy in this box, this is already a pretty strong box. So this is my 4-hour demand zone, okay? Now, I've identified my demand, I've identified my supply, I've identified some of my liquidity, my imbalance, my external liquidity, right? Now, let me go back to, hold on, a screenshot that I have. Everything I'm doing ties down to this, okay? I'm not gonna keep this here, but this is something that I'm basically doing. I'm identifying my key levels and my supply and demand, okay? So, I should probably add, my demand zones are usually including a key level. So I don't just like to identify a demand zone, I like to, or an order block. I like to also identify a key level, because the key level adds more strength to this box, right? Because a lot of people, I've noticed a lot of people, they draw multiple boxes, right? They'll have a box here, they'll have a box right here, and then now they have like boxes everywhere, right? They'll have another box right here, they're like, Ray, support right here, support right here. Like, right now, it's like, which box do I focus on, right? So that's why I like to add some more confluence, some context to my boxes, as opposed to just being a box, right? And then right here, supply. Okay, so if I draw a Fibonacci retracement from, let's say, this high to this low, I can see right here, this low and this high. Now we can even try to use this higher high right here, or this absolute high, and you can see that my supply zone fits in between my premium, right? So I'm going to label this as well. This is my premium, right? So it's not just a supply zone; it's also a premium, okay? Which means if price were to come up here, I would want to go short. Now if price comes down here, I want to go long, right? So just like that, I've already planned for my trade. I'm not trading in here. I'm waiting for price to go up there or down here, right? So either down or up. And then now the RSI. The RSI is aiming up. So obviously, if it's aiming up, it's probably not going to come down here yet. But once this comes back down, we want to look for a trade. Now, if you look right here, every time the RSI is at the bottom, usually it represents a long opportunity, right? So if you don't know what the RSI is, watch a video on it. Very simple indicator, right? So just like that, I've already planned out my trades. So I'm going to go through this really quick because I'm not trying to apply an entry model. I'm just trying to show you. Okay, so right here, we tapped into our 4-hour demand zone, our key level. The RSI is oversold. Now specifically, it's not just oversold. You have a bullish divergence right here. Okay, you have a bullish divergence on the 4-hour time frame. You have bullish price action. The 1-hour time frame, it was oversold in here. So I'm going to go through this. Let me go through this. So bullish divergence. Besides bullish divergence, this external liquidity then becomes a liquidity sweep. Okay. Now in terms of entry, I'm not going to focus too much on the entry because I've done this maybe a different video. But even over here, you have another liquidity sweep. Okay. So on the 1-hour time frame, you have a liquidity sweep. RSI is at the bottom. So you could have already been entering long here. Okay. And then in terms of take profit, that's really going to depend on you right here. What did I mention before? If you have a body like this, you have an imbalance. Imbalance is a magnet for price, okay? Which means price will gravitate to this area just because, okay? So like right here, you can see price gravitate to it really well, okay? And what's nice about that is you sweep all these equal highs, right? So here, let me be specific. Now this may be a long video, but it doesn't really matter. So you have equal highs here, okay? And on the equal highs, you have an imbalance right above it, which is why the price actually goes above these highs and fills in this imbalance, right? So if that was your trade setup, you can take this trade setup. I'm not saying, like, taking profits is really up to you, right? So this is already one trade. Now, depending on if you trade higher time frame and you apply CRT and other forms of analysis, you might even be able to capture the entire move up. But of course, I'll probably make a separate video on that. So entering here, okay, let's just watch it play out. Now, let's go back to the weekly time frame really quick. Was it weekly? I don't even remember. Yeah, I think it was daily time frame. So I said pretty much from over here, I think it was, I don't remember what time frame, but from right here to like the next few days, you could have captured all of these trades. Really what I'm saying is you can try to buy here, sell here if you know how, or you could buy here, sell here, short here, sell even here. You don't have to capture the entire move. A lot of people think, oh, how did Ray capture the bottom? How did he capture the top? You don't have to capture the top or the bottom. You really just have to get a good trade, make some money. Right, so here you have a sweep, right? And then now here, this is different. You just have a fair value gap that gets filled. If you want to be very technical, right here you have your discount and a fair value gap. Now, if you want to go use this next one, that's entirely preference. They both work, but remember, discount is between 5 and 75. But here you have your discount plus your fair value gap. I'm not going to go through all of this, but I'm just showing you really quickly how you could apply all of these things, right? So you have a discount, fair value gap, etc. So you could have entered here as well. So you have pretty much, you have one entry, you have two entries, okay? Right here, take profits right here. Price reaches our premium. This is another short opportunity. So you're not going to short up here if you don't know how. If you don't have an entry model, short the next one or the next one. Okay, so you have two entries here. So in other words, that's 1, 2, 3, 4, or let's just say 3, right? So that's 3 setups. Now, how low can price go? This is I guess this is another key thing. this is where you have to identify another key level, another discount. Okay, so for example, right here, this is going to be my next key level. This is where I want price to go. So I'm going to go through why I chose this, but just for the sake of watching, I'm going to show you. So right here, okay, so it taps my zone perfectly. Right here, right above, I see there's a fair value gap, but right above, so let me go lower time frame real quickly. Let me go lower time. So I've already, remember, I've gone through this trade. All I did here, maybe it was too fast, is I dragged. So I have a low and a high, and it gave me my discount. That's one trade right there. Right here, this entry right here, the very first one, came from marking up the chart, right? The 3 Ws. Okay. So what did I see? I saw a liquidity sweep. That makes sense. So let me circle that. So you have a liquidity sweep. Right here, you have a high, confirm high right here, confirm low, which then gave me my discount. Okay. From there, so I'm gonna delete this really quickly. You can do the same exact thing from this low to this high. So this becomes a high. Okay. And now what I can do is draw a fib, a retracement. So just to show you on a higher time frame, you can do this. Just go from high to this, or to this low to this high, and what that gives you is a new discount zone. So I'm gonna do that really quickly. I'm gonna get rid of some of the stuff because it might look too confusing. So you should already know this supply zone is also a premium. I'm not gonna have too much fibs on my chart because then it becomes confusing. So right here, I'm gonna get rid of this as well. So remember, there's one trade right here, another trade right here, and a trade somewhere in here in this area. Okay. Now right here, you can see there's a divergence that's forming. If you don't know what divergence is, watch a video on it. But right here, this is a trade setup. Not all the way at the top, but somewhere along the lines of dropping down here, you can go short. Now you could also go short right here, but that's just, I mean, I guess we can go over that. Right here, you have a nice supply zone right here. You can call this supply zone or bearish order block. They're pretty much the same exact thing, depending if you trade ICT, SMC, or just purely supply and demand. So right here, this is another short opportunity, right? And if you use this high, you can identify your premium, right? Oh shoot, let's use this high over here. Now depending on how you label this, it might mess with your levels. It really depends on which high you use. But really, you don't need a fib to tell you this is a bearish order block, okay? And then once you see right here, the RSI is overbought at your bearish order block, it's like almost an instant short, and then right here you have a bearish divergence, right? And then right here, these lows right here is just liquidity, right? So right here you just have liquidity being generated. You have a bearish divergence at your order block with the RSI overbought. So in this case, you already have another trade setup right here, divergence. Okay, so I'm gonna put an arrow on all the trades that could have been taken. So right, you have 1, 2, 3, 4. So that's 4 setups in a week. Right, now there's still this one right here, which again, I'm going to go through how we got that. Okay, so here, let me adjust. So this is a key level fair value. Okay, so we're going to go through this one now. How can you capture this entry? So when you're capturing this entry, right, what's very specific, or what you have to do, so it's pretty much going to go back to this right here. It's going to go back to the 3 Ws. Okay, so let's say you started right here. Okay. Let's say that we have no idea if price is going to go down. We don't know if it's going to go up. But where has price been? Price has been in an overall downtrend, right? Retraced from this low to this high, right? Retraced about 60-70%, right? How do you know that? You just use this low to this high, right? So we've already retraced about 50-60% of the way. So here, this was already our discount. People were already trading this. So let me actually label this as my discount again. So from right here, this is my discount zone. I'm going to label this blue just for some different colors. So this is my discount zone, right? But right here, we're reacting at a bearish order block. So if we understand that this is liquidity being generated right here, we also know that there's liquidity below these lows right here and right below this one right here. So I'm going to use this low. So essentially, what am I looking for? I'm going to delete the fib. So I'm looking for a liquidity sweep inside of my discount zone for the next entry, if possible, right? Now, remember, this is my discount zone. Honestly, try to match with the key level. You can see right here, it matches a key level right here. Right, so this is already a pretty strong zone. So based off market structure, we're not going to focus on this 4-hour demand because we've already made, here, let me go through it really quickly. When you have an uptrend, okay, this is going to be demand. Okay, now specifically demand from over here. Right, this is going to be demand. But as price starts to make higher lows, it's going to create a new demand. Right, so that demand then becomes from here to over here. This becomes our new demand. Okay, but this only happens once you have a a reversal. So let's say from a downtrend to an uptrend. So when you have an uptrend, this is what the demand is going to look like, right? So that's pretty much what this discount zone is showing us. It's showing us our new demand, okay? But this is just temporarily, because once price comes back down here, it's going to act as demand, but what could happen is price goes here, it goes up, and it comes back down. That could easily happen as well, right? So you want to see price react to this box, okay? You want to see the RSI reset back down inside of this box. So again, you have 4 trades at the moment. We want to see a liquidity sweep into our discount at our new demand. And right here, we still have not got the sweep yet. Right here, we have no sweep. In fact, we just have equal lows. So we're not going to be entering this trade yet, okay? Right here, we have our liquidity sweep, okay? So let's look at it. The RSI is oversold, okay? Now that you understand this, right, so we have a liquidity sweep at our discount zone, at our new demand, right? This is 1 hour time frame. We have to identify liquidity above. So this is liquidity, right? Right above this, or not right above this, this area right here, if we extend this to the right, this also becomes our supply zone. Now specifically, we want to try to include more of this touch because this is the most recent one. So we can either make the boxes bigger to try and include this, or what we could do is go from here to here. This becomes our supply zone, because this already becomes irrelevant because it already played out, right? So there's a trade setup here. Now there's a trade setup right here, okay? Now in terms of how to capture the entry, just wait for bullish price action, right? That simple. In this case, I would already be looking to enter after the sweep and then put a stop loss right below this lower here. So what does that look like? I would enter here, stop loss below this low, because this is our protected low. And I want to target back up to the supply zone, right? Now ideally, I could see right above my supply zone, there's also a bearish fair value gap. So this is something just to label, but ideally you want to focus on this zone right here, right? Because this is pretty much the zone that brought price down, okay? I'm going to go more in detail with that, but honestly this video is going to get too long, so all I'm showing you is that there are multiple trades to be taken if you just focus on one coin and trade one coin and you really mark up your chart like this. This looks like a lot of information, but really this information is necessary, right? So we're just going to watch it right here. So it's playing out in real time. See, then right here, let's extend this, and boom. Price taps our supply zone, and it even sweeps right above it, right? Now remember, at first, so let me get rid of this order block, or this fair value. Originally, our supply zone is right here, which makes sense. This is our supply zone, right? But sometimes when we're trading the current price action, we don't want to just keep the old one. Sometimes we want to update it by focusing on the current price. But technically speaking, this entire area is your supply zone, right? You still have the touch. Right here is your supply. This is what created the order block. And this is just price tapping our supply zone, multiple times. Now from here, you can try to pinpoint another trade. I'm gonna do it really quick. You could just drive fib here, and then try to identify where price can actually tap into. Right, and this is current time. And it looks like right here we're reacting to our 0.5. But anyways, this is our premium. You could have went short here. This is our discount. It looks exactly the same if you look at it to me. Look at this. You have a divergence right here. See, there's so many things that I don't try to look for every criteria, but this is already a lot. You have a divergence. You have a divergence. It's like the charts are flipped, right? You have a setup right here, setup right here, setup right here, setup right here, and a setup down here. That's multiple trades in 1 week. And all you have to do is mark up your chart like this. So if your chart does not look like this every week, you're making a mistake. Now, granted, you can definitely delete some stuff here, but you at least want to have your boxes. The boxes are really important for identifying your zones. So hopefully that kind of helps. I'm going to go through this multiple times. I'm going to make more videos. I'm definitely going to dive into market structure more. But this is something that we definitely have to learn and master. Okay, I forgot to mention. So before, when I was planning out this trade, right, these trades, all of these trades, I started here, right? So, or I started a little lower, somewhere here. It doesn't really matter. I started somewhere here. Now, the reason why we're drawing all of these boxes, demand, supply, liquidity, equal highs, and bounces, is because essentially what we're trying to do is wait for one of these liquidity levels to be swept, or one of these zones to be swept, or to be tapped, right? So, just as an example, let's say this is the current price. Either price goes up here, or price comes down here. In trading, it's that probability, right? It's like price can go here or it can go there. Now, the reason why I should have mentioned this earlier in the video, and I'm mentioning it now, is because it does answer the 3 W's, which I forgot to mention. Depending on where has price been, where's price currently at, this will help you dictate where price is likely to go next, okay? So, for example, right here, we were distributing. We can clearly see where has price been. We can see there's a series of lower lows and lower highs, okay? So lower low, or high, lower high, lower high, lower low, lower low. If price wants to go lower, it's going to disrespect this lower here and form a new lower low, okay? So that's just something I forgot to mention. So essentially, you want to be able to answer these 3 questions in order to understand where price is likely to go next. So in this case, you have to actually look at what has already happened, right? So depending on, like I said, depends on where you started, depending on what trade you're trying to capture here. So for example, let's say we move a little further into the chart. So right here, where has price been? Price already had, price gave me a liquidity sweep, it tapped our demand plus key level, it formed a divergence, right? So if that was the case, entering right here at this next one is very high probability because all of these things already happened. We tapped a 4 hour, we had a liquidity sweep, we have equal highs that got swept, right? Not to mention, we can draw a fib from this high to this low, which then gives me a discount, right? Now let's look at it in detail really quickly. So right here, I can see price is on my fair value gap and my discount zone, okay? So essentially, you want to be able to answer these questions. That's the reason why I'm saying use your boxes, use colors, truly understand what's happened before you enter a trade. So like I said, where's price been? We have a liquidity sweep at our demand zone, at our key level, RSI reset. We have all this liquidity up here, liquidity here, equal highs right here, and a supply zone here. Because remember, prior to price going over here, okay, this is just an untapped area of liquidity, which also is our supply zone. Okay, so this does just become a neutral color at first. This is just an area where there's liquidity, and then this high right here, you have equal highs, which also acts as liquidity. So I'm just going to add this at the end of the video, but this is just something to understand. We have an imbalance right here in price. So prior to the price even going up here, we should already have an understanding that there's a lot of, so I'm going to delete all this stuff because I do want to really emphasize this point of the video. So before all this stuff happened, I want to emphasize the reason why we mark up our chart is so we can identify liquidity. We have to identify our supply and demand because we already know that price gravitates to these areas, right? So if price gravitates here, you have a short. Since price gravitated down here, you have a long, right? So short, long. So just like that, identifying these zones prior to price getting there is the key to trading, right? And this untapped liquidity, untapped area of liquidity is also going to be our, premium. So let me draw this one more time. This becomes our premium. Okay, so when price comes here, it becomes an instant short because the RSI is already really high. You're at an untapped area of liquidity or your supply zone. You're at a premium. Okay, you have a bearish. You have a divergence right here. So essentially, you have to be able to answer these. I mean, I've been saying this. You have to be able to answer these questions in order to understand where price is likely to go next. If you can't answer the first two, you can't get to the third one. Okay. So right here, for example, where has price been? Price has tapped our supply zone, our premium, formed a bearish divergence with the RSI overbought. Where's price currently at? Price is currently going down, but it's in the middle of nowhere. Okay. How do we know it's in the middle of nowhere? Just draw a box right here. Does this look like a key level to you? It looks like a key resistance, but not a key level, not a key support. Right. So where's price likely to go next? Price is likely to go down, and from there, this is where you identify your discount zone, right? And then boom, wait for price to touch it, and then right here, enter the trade, right? So that's all I'm saying. I'm gonna add this at the end of the video.